Do you have these questions in your mind? What is the stock market? How do people make money in this? Well, you're in the right place. Hi guys, and welcome to my channel Lazy's Finance. In this channel, I share my knowledge about the financial markets as I learn them. Today, let's understand the basics of the stock market. Disclaimer, I'm not a financial expert, and the things I speak stem from my own understanding of the topic. With that said, let's get into the video. The first question, what is the stock market? The answer in simple words would be like this. The stock market is a place to buy and sell securities. Is the stock market a real place? Yes. The place where we buy and sell securities is called the stock exchange or the stock market. Before demat accounts were a thing, you had to go to the stock exchanges through a broker to buy or sell securities. There are two popular stock exchanges in India. One is NSE, which stands for National Stock Exchange, and the other one is BSE, which stands for Bombay Stock Exchange. Now, what is this demat account? Well, demat account stands for dematerialized account. It is a type of account used to hold and manage securities in an electronic format. In India, a demat account is mandatory to buy and sell securities on the stock exchange. Well, basically, a demat account works like a bank account. It holds securities instead of cash. So when you buy any security, it is debited to your demat account. And when you sell any security, it is credited from your demat account. The biggest advantage of a demat account is it eliminates the need of transferring share certificates by hand. Now, what are these securities, you ask? Well, securities are financial assets that we can buy and sell in the financial market. If the financial asset represents ownership in a company, it is called a stock. If it represents a debt owned by the company or by the government to us, it is called a bond. If it represents a right to ownership of a company's assets, it's called options. Next, let's understand what is a share. Let's say I have a company that needs money for some reason. One option I have is to take a loan from a financial institution. But that would be a big commitment because the company will have to pay back the money it borrowed plus interest. The other option I have is to issue shares to the public. This means that the company is offering a piece of ownership in exchange for money from the investors. So, if you give a company some money, they will make you a part owner of the company. I know this sounds complicated, but let me simplify. Here, it shows a split of Reliance. You see the number of shares amounting to 100%. This is the total number of shares, which shows the total ownership of the company. So, if a person wants to be the sole owner of the Reliance company, you would have to buy all these number of shares. Likewise, if I were to buy one of these shares, wouldn't I also be a part owner of the company? Yes, until the share is in my name, I'll be considered a part owner of the company. The part owners of the company are called shareholders. And as a shareholder, I get a share of the company's profits and get to vote on the decisions at the shareholder meetings. If the company makes money, it might give some of it back to its shareholders in the form of dividends. I hope you understand the information I have provided. If you did, please consider giving this video a like and subscribing to the channel to see more videos like this. Now for the main question everyone has on their mind. How do people make money from the stock market? Well, it is all based on price. The balance between demand and supply determines the price. So if there is a high demand for a stock, sellers will try to increase the price to capitalize on that demand. Likewise, if there is a high supply of stock and not as much demand, buyers may try to negotiate a lower price to make the buy. Let's see this with an example. I'm using the example of IRCTC. The IPO price for the share was 315 to 320 rupees for a share. IPO stands for Initial Public Offering. It is when the company issues shares for the first time to the public. If you guys want to know more about IPO, let me know in the comment section down below. For now, know that not all people who wants to get an IPO will get it. IPO is issued directly by the company and it is determined by various factors. So the company was asking 315 to 320 rupees for a share. And there is another concept which you have to know, that after an IPO is released, it can be traded on the stock market. So when the share was listed on the stock market for trading, the seller had an ask of 625 rupees. Because the stock was a hot selling stock and it was in trend, it went up to that price. And on the same day, because the demand was so high, it went up to rupees 727 rupees when the stock market closed. So this is how the stock market, or this is how people make money on the stock market. The investors try to buy it at a low price and sell it for a profit. So these are the concepts which make up the basics of the stock market. Did you know that the activity of buying and selling of the stock market is called investing or trading? Well, what is investing and what is trading? That question will be answered in the next video. So make sure to stay tuned for that video. That's it from this video. If you like how I presented the video, give it a like, subscribe to the channel to see more videos like this, and stay tuned for the basics of trading on the stock market video which is coming up next. As I have told you guys already, I'm learning everything from scratch. So if you guys know any resources that I can use for free, please write them down in the comment section below. With that said, until I meet you in the next video, take care.